Hello and welcome to the CNBC TV18 special. I'm Shereen, Bhan, and we're discussing the state of the economy with the Vice Chairman of the NIti Ayog, Rajiv Kumar. Let me start by asking you about the macros and what the assessment at NITI is when it comes to the macros. While we are seeing a cyclical recovery in the economy, there are several risks that we need to factor in. Oil prices, one possibility. The possibility of a fiscal slippage is something that the market is always concerned about. High interest rates and, of course, the rupee now touching a record low of 69. From everything that I've highlighted as possible risks, what would you be most concerned about?
Shereen, you pointed out to four things, and let me take them one by one. The first one, of course, you mentioned was the oil prices, and as you would have noticed, these have tended to come down, and we are very pleased with Donald Trump's announcement in that he's asking Saudi Arabia to ramp up the production because of the fall in Iranian crude and the Venezuelan crude, and you have seen that there has been some increase, and the prices have moderated. And also, we've got news now that U.S. shale should be entering the picture in a much bigger way, and we are urging the government to fix up the imports from U.S. So our prices, as you noticed in the last 3 weeks, domestic prices have come down. So I think oil prices, the scare is sort of gone. On the fiscal slippage, we had a meeting of 29 leading economists in NITI just the other day. I think it was on Thursday. And there were two very clear views that had come out. See, one, of course, that in these days of turbulence and vulnerability, one must hold on to the target as hard as one could. But there was the other view also that, in the past, fiscal slippages have not always produced inflation, and they might be needed for generating employment, which is a real concern for every government. But the good news here is on the revenue side. As you would have seen now, the GST numbers are very good, 17% increase, the tax base has gone up, and the direct tax numbers, actually direct tax is 17% up, and the GST is coming in at close to 1 lakh per month. So I think there is a fiscal room now being available for the central government to ramp up its public capital expenditure, which has taken care so far of the lack of commercial bank credit to infrastructure. And on the rupee, let me just end by saying that, the rupee is still relatively overvalued given the relative effective exchange rate. So in that sense, it shouldn't be a cause of concern. In any case, there hasn't been a free fall like we experienced that in 2013. And it's very clear, I think everybody agrees, that we are far better prepared and we have far more gunpowder to handle any vulnerability that might come about as either through the Trump tantrums or the Fed raising the rate, etc. So overall macro, we in NITI are pretty sanguine. We think that we are on the right track, and that the economy, given the latest manufacturing PMI, the sharp increase that you've seen of 53 going up to 53, I think the recovery is strengthening, and you will continue to see a rate of growth of above 7.5 in the quarters in FY19, as it were.
Sir, you picked up on several aspects there. Let me just go back to that meeting that you spoke of, the economist meeting that NITI held, where you said that there was a view on whether you need to stick with the fiscal deficit number or could you perhaps exceed it to try and pump prime the economy. Which one was the majority view, of sticking with the deficit number or being able to pump prime if need be?
There was a clear distinction in my view between economists representing investment banks and funds and those who are concerned about fixed income, state of fixed income markets, etc. And basically the financial sector economists. But on the other hand, we had I think equal numbers of the other macroeconomists from think tanks and institutes of IIMs and others who sort of believe that growth has also got to be a prime objective, and in fact employment, as they said, and they said that there is therefore there is therefore no need to be very hawkish on the fiscal deficit number.
Is that the NITI Ayog's point of view as well, sir? Is that the NITI Ayog's point of view, that we don't need to be particularly hawkish on the fiscal deficit number?
Niti Ayog's point of view has always been to exercise fiscal prudence and to be cognizant of the target, but to continuously explore space for higher fiscal space to meet the obligations of public capital expenditure.
Okay, let me ask you about some pending decisions, and this is something that we believe we could get an answer from the government on in this week, and that is the MSP. Why is it taking so long for the government to come out with the calculation as far as the new MSP is concerned, and where do things currently stand? Are we expecting a decision this week?
Well, there are two separate parts here, points here. One is the announcement of the MSP itself. And I think that's about, you should see that announcement within this week or the next week. I think those numbers and those estimates being done by the CACP, the Commission on Agricultural Costs and Prices, I think are ready and they would be announced. I suppose, as always, they are going through a final check on how the, in the government as a whole. So that's first point, and I think there should not be much delay in that announcement. The second aspect, of course, is the government's own schemes for procuring at that MSP, because now the government has announced its intention very clearly in the budget that they will cover all 17 crops, all 23 crops under the MSP formula, and therefore the Niti Ayog had proposed 3 alternatives to that, and those have yet to be discussed in some detail. And I know that these discussions are
but it's been a while since the budget, Mr. Kumar. So that's what I'm trying to understand. Why is it taking so long? I'm also given to understand that perhaps the finance ministry has raised some concerns on the fiscal impact of the new MSP formula that the Niti had suggested, the 3 proposals that you had put forward. So has there been a revision that the Niti or the Agriculture Ministry has made post the finance ministry's feedback?
Yeah, if you had read it carefully, Shereen, the objections from the finance ministry, which I haven't seen formally, but I've read in the press, are about the 2 formulas that have been proposed, because the third actually wasn't discussed in some sense, and this is what so the finance ministry's own concerns, genuine concerns, plus the fact of some of the states wanting to have their views heard about the 3 different schemes is what is causing some complexity. It is a very complex situation, because and what we are trying to do from Niti is to re-look at all the 3 and figure out as to how we can minimize the fiscal burden while getting the best deal to the farmers. But the most important thing here is that the government is committed to giving the farmers the best deal possible, so that any complaint about procurement being less than what is needed or warranted shouldn't be there.
So how much longer, Mr. Kumar, before we actually see a decision and clarity on the new MSP regime? And ballpark, we are given to understand that the proposal that was sent to the finance ministry would have in fact meant an outgo of about 25 to 30,000 crore rupees. That was the ballpark that we were given to understand. Is that accurate?
I am not sure of that. I am not sure of that number. And to predicting how long anything will take in a government is like predicting the World Cup soccer World Cup results. So I'm not going to hazard that. Yeah.
Okay.
So, but I think it'll be out so.
Given the current appetite and context, are we at least when it comes to big ticket strategic divestments, are we likely to see a transfer from one government balance sheet to another?
No, you will not, and you will see actual disinvestments taking place, and you may, however, be a little disappointed in the sense that us not being able to find a single strategic investor in each of the public sector enterprises, because that's not easy to get, and that depends on a whole number of things. But you will see this target of 80,000 crore being met through proper, as I say, normal disinvestment proceeds through the market. Let me put it like that.
Okay.
And this will happen in the third and the fourth quarters of FY19.
Okay, so you're saying strategic divestment may be a challenge given the lack of buyers, but through the ETF route, through the OFS route, the government will achieve its disinvestment target. There has been a fair amount of criticism that why is the government pressing ahead with LIC picking up IDBI Bank? We are given to understand that there were perhaps at least two interested private sector players, but the government has chosen to go the LIC route. Why should the government saddle LIC with IDBI Bank that's saddled with a mountain of NPAs at this point in time is the question that most people are asking.
Well, I mean, I don't know whether you're right in saying that the government has posed the LIC. LIC, I suppose, has an independent board, and it's probably a board decision of the LIC. But even if I accept the fact that the government may have, may have in some sense nudged the LIC to do so, I don't see any issues in that. Because if there is surplus cash available in one of the government corporations which can be put to good use, if and if only the IDBI management is changed, and if only we have made sure that the governance, the corporate governance has been put on the right track, then we should be doing this. Because I think this is a question of one company making a sort of a reasoned investment decision in the hope that it will make money going forward. Now, I believe that the chairman and managing director of the IDBI has now been appointed.
Yeah.
He's somebody who's very, who's a wonderful, I know he's one of the best professionals in the, I think it's Sriram,
yes.
Mr. Sriram,
yes.
Whom I've known in the SBI when I was on the board. And I think under his leadership, you will find IDBI, IDBI recovering and being put on the right track. And therefore, for all you know, just like Barack Obama did with his banks, LIC may have made a very good bet.
On that note, we'll take a break, but we continue our conversation with the Vice Chairman of the NITI Ayog, Rajiv Kumar.